Hi class, and welcome to this video of VCE Year 12 Economics. And this is our first video on monetary policy. So we are in Unit 4 Outcome 1 and we have covered budgetary policy, and now we're going to cover monetary policy. Now the purpose of this video is to understand what we mean by monetary policy and, importantly, the role the Reserve Bank of Australia has to play in it. So it's going to be a bit of an introductory video. Now, if you see this part of our study design, you can see there is 6 key knowledge points for monetary policy, and we are in the first one here. So it's really an introductory, and as I said, my goal of this video is that you understand what the Reserve Bank is, you understand what the monetary policy is, and we understand the link or relationship between them, which is inherently linked. And there is a charter that the Reserve Bank that explains what their role is in terms of monetary policy. So what is monetary policy? Monetary policy is essentially designed to manipulate key financial variables in the Australian economy. Now that sounds a bit complicated. Monetary policy is all about manipulating interest rates. And interest rates can either go up or go down. And the monetary policy is all about manipulating interest rates so they go up or down. Now, why would they do that? Because interest rates greatly impact the economy. And they can, if they are manipulated, in the right way, hopefully Australia's economic goals will be achieved. And we know that these goals, and we've talked about them lots, are low inflation, strong, but I'm going to just say it here, strong GDP, but sustainable GST, and full employment. And if we do that, we should improve the living standards of Australia. So to summarise, monetary policy is all about manipulating interest rates to achieve Australia's economic goals and improve living standards. Now, who is in charge of this? This is the Reserve Bank of Australia, or RBA for short, and I'll use the term RBA throughout. So how do they do this? How do they make these decisions? While improving living standards is the ultimate goal, the Reserve Bank of Australia focuses on one objective, and that is the stability of the currency, or price stability. And when you see the term price stability, I hope that instantly you know that I am talking about inflation. So essentially the Reserve Bank's goal is to keep inflation within its target, which, as we know, is on average 2 to 3%. Now, it doesn't mean, so if Reserve Bank's job is to keep inflation within 2 to 3%, and they use interest rates to do this, and we'll talk about that in future videos, it doesn't mean that the Reserve Bank of Australia has failed if inflation is below 2, or above 3% for a short time. It's only a significant concern if it's for a sustained period of time and it is impacting the economy. Now, if they're able to achieve this target, this means the Reserve Bank can also focus on growth and full employment and other variables, but they only will do this while ensuring it doesn't impact the inflation target, and they focus on inflation for a specific reason. So what is the role of RBA? Let's have a look at the actual charter, some quotes from their role. The Reserve Bank of Australia, or the duty of the Reserve Bank Board within the limits of its powers, is to ensure the monetary policy and banking policy of the bank is directed towards the greatest advantage of the people in Australia, and that the powers of the bank are exercised in such a manner as, in the opinion of the Reserve Bank, it will best contribute to 1. The stability of the currency of Australia, inflation, maintenance of full employment in Australia, and the economic prosperity and welfare of the people in Australia. So you can see the Reserve Bank of Australia's goals are to ensure Australia's macroeconomic goals are achieved. And you can see the first one they talk about is inflation. So what is the role? And if you are interested, you can see that there is a YouTube video there, which I am happy to put into the description of this YouTube video, so you can click on it and look at it. Really, there is 3 key roles of the Reserve Bank. Number 1, the Reserve Bank of Australia implements monetary policy. Probably their most important role. It involves changing interest rates, so increasing interest rates up or down, designed to influence aggregate demand, improve domestic economic conditions, I've missed a word there, and they do this to make sure inflation stays within 2 to 3%. They have a few other roles. The Reserve Bank of Australia is actually responsible for issuing coins and notes, and is a custodian or a holder of the Australian reserves of foreign currencies. So Australian government will have reserves of US dollars, lots of different other foreign currency. The Reserve Bank holds them. It is essentially the bank for the government. So we can't open an account in the Reserve Bank of Australia, but the government essentially can. And this is where we come back to our third role. The RBA is banker to the federal government. It will give the government loans if they need to. And this is where we talk about government bonds. It will look after its bank accounts, so its foreign currencies and domestic accounts. And they're the 3 roles. Now, you might be interested or thinking, why interest rates and why pursuing low inflation? That seems quite a specific component of the overall economy. The answer is interest rates are particularly influential and have the capacity to alter aggregate demand. Interest rates are going to impact the private consumption that people are spending, because interest rates is going to influence how much money they have to consume, how much money they're willing to invest, and it's even going to impact imports and exports and those sorts of things. So ultimately, interest rates is going to influence economic activity. It's regarded as an aggregate demand side policy that can be used to help achieve the goal of low inflation. Because if we can tweak aggregate demand, we can influence inflation, provided inflation is being driven by demand side policies or demand side influences. The main reason why the RBA gives priority to inflation is because they know that low inflation is often a precondition for all the other macroeconomic goals. If you think about the other goals, gross domestic product, strong and sustainable gross economic growth, we're saying we want as much growth as possible so long as inflation stays low. So if we keep low inflation, we've got the best chance of having strong economic growth. Full employment is all about having as many people employed as possible, but not creating inflationary pressure. So you can see low inflation is a precursor for the other goals as well. Limiting inflation is hence the best way to create conditions that maximize sustainable rates of economic growth and full employment, where we would say we are minimizing cyclical unemployment. The thinking is simple. Low inflation helps the economy. Low inflation helps maintain consumer and business confidence that is needed to drive spending and investment. And that's why it's so important. And one of the best ways to influence inflation is this mechanism of interest rates, which we'll talk about in future videos. So for now, that's where we end. I hope this has been a good introduction to monetary policy. It's all about influencing interest rates to ensure that macroeconomic goals are met. The entity that controls interest rates is the Reserve Bank of Australia. And we now understand the role of the Reserve Bank of Australia and their charter to make sure macroeconomic goals are met, with the focus on inflation, because inflation is the best way to ensure, low inflation is the best way to ensure that other goals are met as well.